Lee from Bell Direct, equities analyst. Julia, great to see you. Don't forget too that you can join in the conversation with a question or a comment on Twitter. Just use the hashtag MKTDay or email us at yourmoney@skynews.com.au and we'll try and get it answered for you here. Julia, take us through what you saw on the market today and where that strength was coming from.
Friday, the market gained 0.2%, and while it doesn't seem like much, once again we saw the highest level that we've seen since April 2011, and really we seem to be testing up that 4,800 point mark over the last couple of sessions. If we have a look at markets around the globe, it isn't surprising that the Australian market is doing well. We're seeing the US market at 5-year highs. In fact, if we have a look at a chart of the S&P 500, this is what it looks like over the last 5 years, and you can see it's an impressive looking chart. The Australian market looks a little bit different. The US market looks like it's gone up almost in a straight line there. But if we have a look at the Australian market, this is what it looks like over the last 5 years. And the reason I bring up this Australian chart over the last 5 years is because we're coming up to a very important level on the Australian market. If we have a look at the ASX 200 level, we know that the low back in 2009 was at 3,120 points, and the high that we saw in 2007 was at 6,851 points. The 50% retracement level is at 4,986 points. So we're very quickly coming up to that very strong and very important resistance line. So if we have a look at how that's worked out, we just get the Fibonacci retracement tool. We get the high back in 2007, the low back in 2009, and if we have a look at that 50% mark, you can see how close we are to that at the moment. So we're going to be watching that one closely. Having said that, the Australian market has had such positive momentum. In the last 10 weeks, we've seen 9 of those weeks with gains, and in fact, over the last 7 sessions, we've seen 7 consecutive sessions of gains for the Aussie market. Today was mainly driven by the materials and the banks. But we're almost through the first month of the year, and it has been a great one. Last year was one where we really saw those cyclical companies underperforming, but we're seeing the opposite this year, where those cyclicals are outperforming. In fact, if we have a look at the top 3 performers in 2013 so far, there's some of the media stocks like 10 as well as 7 West Media, which are up 20% in the year to date so far, so in the last 3 weeks, and also Billabong, which is up by 18%. Now these 3 stocks last year lost anything between 38% to 50%, so it does look like investors really investing into some of those cyclicals as well as those turnaround stories. But another fantastic day for the Australian market, the 7th consecutive day of gains.
In terms of stimulus by central banks around the world, including, of course, the Fed. Julia, I just wanted to ask you about one gold miner that did outstandingly today, St Barbara, best performing. There, after production, what returned to normal?
We saw an enormous reaction in St Barbara Mines shares, up by 12.4% in just one session, and that's on the back of its second quarter production numbers. This follows from its first quarter numbers, and the first quarter numbers we did see a number of problems in terms of production, especially in terms of truck haulage at its Gwalia project. By the second quarter, these problems look like they've been resolved, and we actually saw production up 19% on quarter to just over that 92,000 ounce mark. So the market quite pleased with that, and of course they've retained their full year forecast for production, 371,000 to 401,000 ounces, and that means we're expecting things to get better for St Barbara Mines. Yes, they've come back and they've managed to go past expectations in that second quarter, but the fact that they've retained their full year forecast means that the second half is going to be a lot stronger than what the market anticipated, and that bodes well for the next couple of quarters. So St Barbara Mines, a great performance, up by 12.4%. We have a look at the gold trade. Really what's been powering that along has been 2 things. One is that investors have been quite risk averse in gold's status as a safe haven asset, and secondly the money printing that we've been seeing, especially the weakening of the US currency. But of course, if we do start to see better economic numbers coming through from the US, and the possibility that we may see interest rate rises in that particular economy, which of course probably won't be until after 2015, well, that really takes away from the attractiveness of gold. So gold's had a fantastic run over the last decade, but I guess we are watching the movements in terms of the US economy very closely, because gold's movement has really been tied to that story.
You're mentioning the good performance of BHP today, quite a support for the market too, obviously, after that production report.
A very impressive production report coming through from BHP. We've seen the quarterly production numbers flow through. Iron ore pretty much coming in line with expectations, and of course the Pilbara production once again a record there. In fact, if we have a look at the half-year production numbers, it represents the sixth year that we've seen consecutive record numbers coming out of its Pilbara iron ore operations. Petroleum also made a larger chunk of production as well. We saw it coming in at 59.9 million barrels of oil equivalent for the quarter. And that really puts it on track to meet its four-year forecast of 240 million barrels of oil equivalent, which it has kept steady. And if we have a look at copper, that came in slightly below our expectations, but we did see an improvement there on quarter. And Escondida expected to grow production about 20% in FY13. Now, BHP's results are on the 20th of February, and this one's going to be watched very closely, given that we've seen Rio Tinto coming out with some fairly large write-downs. So we are watching aluminium as well as the nickel assets quite closely there. But BHP today having a good day and a key support for our market. It is the biggest stock on our market, and it was up 1.3% today.